If you own 100 ounces of silver right now, what I'm about to share with you could be the difference between watching your wealth evaporate or positioning yourself for one of the greatest wealth transfers in modern history. And I'm not being dramatic here. What's happening in the silver market right now is something most people won't see until it's too late. But you're here, which means you're already ahead of the curve. Let me paint you a picture of what's really going on. While everyone's been distracted by headlines and noise, something extraordinary has been building beneath the surface of the precious metals market. And if you own silver, you need to understand exactly what this means for you. Here's what most people don't realize. Silver isn't just a precious metal anymore. It's become something far more critical. Every solar panel being installed across the globe requires silver. Every electric vehicle rolling off the production line needs silver. The entire green energy revolution that governments are mandating, it runs on silver. We're talking about industrial demand that's absolutely exploding while supply is doing the exact opposite. But that's just the beginning of this story. Let me show you what the big players are doing while retail investors are sitting on the sidelines wondering what to do. Central banks around the world have been accumulating gold at a pace we haven't seen in decades. They're not doing this because they think the dollar is strong. They're doing this because they know something the average person doesn't. And here's the kicker. When central banks load up on gold, silver historically follows with even more explosive moves. Think about what happened when Nixon closed the gold window back in the 70s. Gold went from $35 an ounce to over $800. But silver? Silver went from $1.50 to $50. That's a 33 times multiplier compared to gold's 23 times move. Why? Because silver is the poor man's gold. When the wealthy protect themselves with gold, the middle class rushes into silver. And we're seeing the exact same setup forming right now. Now, before we go deeper into this, I want to make sure you have access to something I put together. There's a free guide in the description below that shows the saving secrets thousands of American retirees are using to protect their hard-earned wealth. It's completely free, and if you're concerned about what's coming, you'll want to grab that while it's still available. Let me tell you about something that happened just recently that should have everyone paying attention. The COMEX, which is the major exchange where silver futures are traded, saw something unusual. The amount of physical silver available for delivery dropped to levels that would have been unthinkable just a few years ago. We're talking about inventories that could be drained in a matter of weeks if industrial users decided they needed to secure physical supply. And here's where it gets really interesting. The paper silver market, the futures and derivatives, trades at volumes that are hundreds of times larger than the actual physical silver that exists. It's like a game of musical chairs where there are 1,000 people dancing around 10 chairs. Everything works fine until the music stops and everyone realizes there aren't enough chairs to go around. But let's talk about what this means for you specifically. If you own 100 ounces of silver, you're holding something that's becoming increasingly scarce in physical form. While paper contracts can be created out of thin air, physical silver cannot. It has to be mined, refined, and delivered. And that process is getting more expensive and more difficult every single year. The mining companies are facing a crisis that most people don't understand. The easy silver has already been mined. What's left requires going deeper, processing lower-grade ore, and dealing with environmental regulations that make new projects nearly impossible to develop. The average silver mine takes 7 to 10 years from discovery to production. That means even if silver prices doubled tomorrow, we wouldn't see meaningful new supply for nearly a decade. Meanwhile, demand is accelerating at a rate that's frankly shocking. The solar industry alone is projected to consume more silver in the next few years than was used in the entire previous decade. Electric vehicles are multiplying that demand. And then you have the investment demand, which is just starting to wake up to what's happening. Let me share something with you that really drives this home. There's a concept in markets called the stock-to-flow ratio. It measures how much of something exists above ground compared to how much new supply comes to market each year. Gold has a stock-to-flow ratio of around 60, meaning it would take 60 years of current production to match what's already been mined. Silver? It's sitting at around 22. But here's the thing. Most of that above-ground silver is locked up in industrial applications. It's in your phone, your computer, your car. It's not coming back to market. The actual available silver for investment is far smaller than most people realize. Some estimates put the total investable silver supply at less than 2 billion ounces globally. Sounds like a lot until you realize that's less than $30 worth of silver for every person on Earth. Compare that to the tens of trillions sitting in stocks, bonds, and real estate, and you start to see how tiny the silver market really is. Now here's where the story takes a turn that should have every silver owner paying very close attention. We're seeing a divergence between the paper price and the physical price that's unprecedented. Go try to buy physical silver right now and you'll pay a premium over the spot price. That premium has been widening, which tells you that the people who actually want to hold the metal are willing to pay more than what the paper market says it's worth. This is exactly what happened before previous silver squeezes. The paper price stays suppressed while physical premiums explode. Then suddenly, the paper market has to catch up to reality, and that's when you see those vertical moves that make headlines. But let's talk about the elephant in the room, the dollar. Everything I've just described is happening while the dollar is still the world's reserve currency. But what happens when that changes? And make no mistake, it is changing. The BRICS nations are actively working to create alternative payment systems. China and Russia are settling trade in their own currencies. Saudi Arabia is accepting yuan for oil. These aren't just headlines. These are fundamental shifts in the global monetary system. When the dollar loses its reserve status, even partially, the amount of dollars that will flow back into the United States will be staggering. That's inflation on a scale most Americans can't even imagine. And when that happens, people don't rush into stocks or bonds. They rush into hard assets. They rush into things that can't be printed. They rush into gold and silver. Here's something else that's not being talked about enough: the ratio between gold and silver prices. Historically, this ratio has averaged around 15 to 1, meaning 15 ounces of silver would buy you 1 ounce of gold. Right now, we're sitting at a ratio that's significantly higher than that historical average. What does that tell you? It tells you that silver is undervalued relative to gold. And when that ratio reverts to the mean, which it always does eventually, silver doesn't just catch up, it overshoots. Let me give you a real-world example of what this looks like. Back in 2011, when silver hit its peak, the gold-to-silver ratio compressed dramatically. Silver didn't just go up, it went parabolic. We saw moves of several dollars in a single day. People who owned physical silver saw their wealth multiply in a matter of months, and the setup we have now is even more compelling than it was back then. Think about the supply and demand fundamentals. In 2011, we didn't have the green energy revolution. We didn't have electric vehicles becoming mainstream. We didn't have solar installations happening at the pace they are now. The industrial demand for silver was a fraction of what it is today. Yet silver still went parabolic. What do you think happens when industrial demand is at all-time highs and investment demand finally wakes up? Now, I want to address something important here because if you're sitting on retirement savings and you're watching all of this unfold, you might be wondering how to position yourself properly. If you have $100,000 or more in retirement accounts, there's something you should know about. Gold IRAs allow you to hold physical precious metals inside your retirement account without triggering tax penalties. I put together a comprehensive guide on how this works. It's in the description below. It covers everything from the mechanics of setting one up to the specific benefits in the current environment. This isn't about making a quick buck. This is about protecting wealth you've spent decades building from the monetary chaos that's unfolding. With everything from potential market collapses to geopolitical instability to currency debasement, having a portion of your retirement in physical precious metals isn't speculation. It's insurance. And right now, that insurance is looking more valuable every single day. But let's get back to what's happening in the silver market specifically, because there are some developments that are absolutely critical to understand. The commercial banks that have traditionally been short silver, meaning they've been betting against it, have been reducing their short positions. This is huge. These are the smart money players. They don't reduce shorts because they think prices are going down. They reduce shorts because they don't want to be caught on the wrong side when prices explode higher. At the same time, we're seeing massive inflows into silver ETFs. Now, ETFs are interesting because they're supposed to be backed by physical metal. When money flows into these funds, they're supposed to go out and buy physical silver to back those shares. But here's the problem. There's only so much physical silver available. And when these funds start competing with industrial users and individual investors for that limited supply, something has to give. Either the price goes up dramatically, or the ETFs start playing games with their backing ratios. Either way, it's bullish for physical silver holders. Let me tell you about something that happened in the nickel market recently that's a perfect preview of what could happen in silver. Nickel prices went absolutely vertical when a short squeeze developed. The London Metal Exchange actually had to halt trading and cancel trades because the situation got so out of control. Now, nickel is a much smaller market than silver, but the dynamics are similar. When you have a physical shortage combined with large short positions, the potential for explosive moves is enormous. And here's what most people miss. Silver is used in such small quantities in most applications that even if the price doubled or tripled, manufacturers would still buy it. If you're building a solar panel or an electric vehicle, the silver cost is a tiny fraction of the total. You're not going to stop production because silver went up. You're going to pay whatever it takes to secure supply. That's what creates these parabolic moves. Inelastic demand meeting constrained supply. Now let's talk about what this means for someone who owns 100 ounces of silver. That's roughly 3 kilograms of metal. It's a meaningful position, but it's not so large that you couldn't add to it if you wanted to. The question is, what's the right strategy from here? First, understand that physical silver is different from paper silver. If you own physical metal, you own something real. You can hold it. You can store it. Nobody can click a button and make it disappear. That's not true for paper contracts or even some ETFs. Physical ownership matters, especially in a market where the paper-to-physical ratio is so extreme. Second, think about the timeline. Silver can be volatile in the short term. We might see pullbacks, we might see consolidation. But the long-term trajectory is clear. The fundamentals are screaming higher prices. The question isn't if silver goes higher. The question is how high and how fast. Third, consider your overall portfolio allocation. 100 ounces of silver is great, but what percentage of your total wealth does that represent? Most financial advisors who understand precious metals suggest anywhere from 5 to 20% of your portfolio in physical metals. If you're underweight that allocation, this might be the time to consider adding more while prices are still relatively reasonable. But here's something crucial that I need you to understand. The window for accumulating physical silver at these levels might be closing faster than most people realize. We're already seeing premiums expand. We're already seeing delivery delays from major dealers. These are the early warning signs that supply is getting tight. Think about what happened during the pandemic when people suddenly wanted to buy silver. Premiums exploded. Wait times went from days to months. And that was just a temporary spike in demand. What we're facing now is a structural supply deficit that's only going to get worse as industrial demand continues to grow. Let me share something with you that really puts this in perspective. The entire annual silver mine production globally is around 800 million ounces. That sounds like a lot until you break it down. Industrial demand alone consumes more than half of that. Then you have jewelry, silverware, and other fabrication uses. What's left for investment? Maybe 200 million ounces in a good year. Now divide that by the number of people who might want to own silver as the monetary system becomes increasingly unstable. The math doesn't work. There simply isn't enough to go around if even a small percentage of global wealth tries to move into physical silver. And here's the thing that keeps me up at night. Most of the silver that's been mined throughout history is gone. It's been used up in industrial applications. Unlike gold, which mostly sits in vaults and gets recycled, silver gets consumed. It's in landfills. It's in electronics that will never be recycled. It's gone. The above-ground supply of silver is actually shrinking, while demand is exploding. Now, some people will tell you that silver is just an industrial metal, and that it doesn't have the monetary properties of gold. But that's not true. Silver has been money for thousands of years. It's mentioned in the Bible as money. It was the primary currency for most of human civilization. The word for money in many languages is the same as the word for silver. The only reason silver isn't used as money today is because governments decided to demonetize it. But that doesn't change its fundamental properties. Silver is durable. It's divisible. It's portable. It's recognizable. It has intrinsic value. These are the properties of money. And in a world where fiat currencies are being debased at an unprecedented rate, those properties matter more than ever. Let me tell you about something that's happening right now that most people aren't paying attention to. State legislatures across the United States are passing laws to recognize gold and silver as legal tender again. These aren't fringe movements. These are mainstream legislative efforts to provide alternatives to the dollar. Why would states be doing this if they weren't concerned about the long-term viability of the current monetary system? The answer is obvious. They see what's coming. They see the debt levels. They see the money printing. They see the loss of purchasing power. And they're taking steps to protect their citizens. If you own silver, you're doing the same thing. You're taking steps to protect yourself and your family from what's coming. Now, let's talk about the psychology of markets for a moment, because this is where most people get it wrong. Markets don't move in straight lines. Silver especially doesn't move in straight lines. It consolidates. It pulls back. It frustrates holders. And then, when everyone least expects it, it explodes higher. The people who make life-changing wealth in silver are the ones who understand this pattern and have the patience to hold through the consolidation phases. Think about someone who bought silver back when it was trading in the single digits. They had to sit through years of going nowhere. They had to listen to people tell them they were crazy. They had to watch other assets go up while silver did nothing. But then, when silver finally moved, it didn't just go up 20 or 30%. It went up several 100%. That's the nature of this market. Long periods of consolidation followed by explosive moves. And here's what you need to understand. We're coming out of one of those consolidation phases right now. Silver has been building a base. It's been coiling like a spring. The longer this consolidation lasts, the more explosive the eventual move will be. If you own 100 ounces of silver, you're positioned for that move. The question is, do you have the conviction to hold through the noise? Because there will be noise. There will be analysts telling you silver is going to crash. There will be headlines about how the dollar is strong. There will be temporary pullbacks that shake out weak hands. But if you understand the fundamentals, if you understand the supply and demand dynamics, if you understand the monetary backdrop, then you can ignore the noise and focus on the signal. The signal is clear. We're heading into a period of monetary instability, unlike anything we've seen in our lifetimes. The amount of debt in the system is unsustainable. The money printing is unsustainable. The loss of confidence in fiat currencies is accelerating. And when that confidence finally breaks, when people realize that their dollars are losing purchasing power faster than they can earn them, they're going to rush into hard assets. And silver, because it's more affordable than gold, because it has industrial demand supporting it, because the supply is so constrained, is going to be one of the primary beneficiaries of that rush. We're not talking about silver going up 20 or 30%. We're talking about the potential for silver to multiply several times over from current levels. Now, I want to be clear about something. I'm not telling you this to create fear. I'm telling you this because if you own silver, you need to understand what you own and why it matters. You need to understand that you're not just holding a piece of metal. You're holding a form of wealth that has survived every currency collapse, every empire's fall, every financial crisis throughout human history. Think about the people who held silver through the Weimar hyperinflation. While their neighbors saw their life savings become worthless, silver holders preserved their wealth. Think about the people who held silver through the collapse of the Roman currency. While the denarius was debased into oblivion, silver maintained its value. This isn't speculation. This is historical fact. And we're facing a similar situation now. The difference is, we have the benefit of history. We can see what's coming. We can prepare. And if you own 100 ounces of silver, you've already started preparing. The question is, what do you do from here? My suggestion is simple. First, make sure your silver is stored securely, whether that's in a safe at home, in a safety deposit box, or with a reputable storage facility. You need to know your metal is protected. Second, consider your overall allocation. Are you properly diversified across different forms of wealth preservation? Do you have some gold as well? Do you have other hard assets? Third, stay informed. Understand what's happening in the markets. Understand the monetary policy decisions being made. Knowledge is power, especially in times of uncertainty. But most importantly, have conviction. If you've done your research, if you understand why you own silver, then don't let short-term volatility shake you out. The people who make generational wealth in precious metals are the ones who buy and hold through the cycles. They're the ones who understand that the real move hasn't even started yet. Because here's the truth that nobody wants to talk about. The silver market is so small that when the real money starts flowing in, when institutional investors start allocating even a tiny percentage of their portfolios to silver, when pension funds start looking for inflation hedges, when sovereign wealth funds start diversifying out of dollars, the price moves are going to be unlike anything we've seen before. We're talking about a market that trades maybe $30 billion worth of physical silver per year, trying to absorb potentially trillions of dollars in demand. The math doesn't work. The only way the market can clear is through dramatically higher prices. And if you own physical silver when that happens, you're going to be very glad you held on. Now, before we wrap up, I want to make sure you have all the resources you need. If you've watched this far, you're clearly serious about protecting your wealth. That free guide I mentioned earlier, it's in the description below. And here's something special for people who watch all the way through. If you're an American retiree with at least $100,000 in any retirement account, you can get an exclusive one on one educational web conference completely free. No obligation. Just mention you watched this video. This is only available to people who are serious about protecting their retirement, and it's only available for a limited time. The bottom line is this. If you own 100 ounces of silver, you own something that's becoming increasingly valuable in a world that's becoming increasingly unstable. You own something that can't be printed, can't be debased, and can't be created out of thin air. You own real wealth in a world of paper promises, and as more people wake up to what's happening, as more people realize that the emperor has no clothes, that silver you're holding is going to become more valuable than most people can imagine. The question isn't whether you should own silver. If you're watching this, you already know the answer to that. The question is whether you have enough, whether you're properly positioned, and whether you have the conviction to hold through what's coming. Because what's coming is going to separate the people who understand real wealth from the people who are still chasing paper returns. Make sure you're on the right side of that divide.